Imagine this. You have been recording transactions all week. Sales, expenses, cash, everything. But suddenly your accounts don't balance. Now you are confused. Did you make a mistake? This is where the trial balance comes in. And today I will show you how it works in the simplest way possible. What is a trial balance? A trial balance is a list of all balances in a business at a given time. It shows all debit balance and all credit balances and helps check if your accounts are correct. Now let's look at the main purpose of a trial balance. The main purpose of a trial balance is simple: to check if the total debit equal the total credit. If they are equal, then your books may be correct. If not, then there is an error somewhere. Why is it important? Without a trial balance, you cannot prepare a financial statement. You cannot detect errors easily. Your account may be unreliable. Trial balance acts like a checkpoint in accounting. Let's look at the structure of a trial balance. A trial balance has three columns: account name, the debit column, and the credit column. Example: cash is debit, expenses is debit, capital credit, sales credit. Now, let's look at the simple example in a trial balance structure. Say your cash is 1,000, your expenses is 200, capital 1,000, sales 200. So if you want to understand why cash is debit and capital is credit, I have a separate video on debit and credit explained simply. Quickly check my channel and watch the video on debit and credit to have a better understanding. So we continue. Let's look at the trial balance structure. So the trial balance table, you can see we have the account name column, we have the debit column, and we have the credit column. So this has been placed properly so that the debit will be at one side, the credit will also be at a different column. We can see that the cash is under the debit column as 1,000, expenses is under the debit column as 200, capital is under the credit column as 1,000, the sales is under the credit column as 200. So the total for both sides, debit and credit, equals 1,000 to 1,002. So totals are equal, balanced. So both sides are balanced. So let's look at the common mistakes students make. So students often forget one side of a transaction. They often forget one side of a transaction. If one side of the transaction is missing, the account will not balance. So they often also forget to swap they swap both the debit and the credit. So instead of posting it as debit, they post it as credit. Instead of posting it as in the credit column, they post it in the debit column. When it's like that, their account, the trial balance will not balance. Another mistake is making calculation errors. So if you make calculation errors, it also affects the trial balance. The trial balance will not agree. So the debit side must always equal to credit side. So whatever entry you are doing at the debit, you must have the corresponding credit entry to make it balance. So even if the total balance, errors can still exist. Note that even if the total balances, there can still be errors. So now let's look at um limitations, important notes we need to consider. So trial balance does not detect all errors. Okay, it doesn't detect all errors. It cannot detect errors of omission, errors of principle. It cannot detect errors of commission. There is a common exam question. So let's look at a simple summary. Now, we know that trial balance is a list of accounts that is used to track or check accuracy. And also, a trial balance is based on double entry system. So if total debit must equal total credit for it to be balanced. So now let's look at call for action. If this video made trial balance made simple for you, subscribe now to Accounting Made Simple by Etelish. So I have break down accounting topics step by step so you never get confused again. Comment on the comment section, like and share. Comment what part of accounting confuses you the most. Thank you very much for watching from the beginning to the end. I'll see you in the next video. Bye for now. Bye.